for now, in today's session of market movers, we are going to take a look on the Euro USD, which has of lately turned bullish after touching the lows below 1.20 levels. It has seen substantial buying momentum in last two sessions. Even in today's session, it is continuing on the upward trajectory, and I think there are some key levels to watch out for, and we will try to see what is the implications moving forward for the rest of the week also. So let's get started for today's session of market movers. If we take a look on the equity segment of the market, we are seeing sideways momentum prevailing in the European equity indices. And now, as the US session has got underway, we are seeing some buying on the lower side, but more or less, you can say that no big rally is expected on these record levels. Rather than that, maybe some upward momentum is still there, but more or less, I am expecting the markets to remain in the sideways momentum with the bias still being on the bullish side. So even in this market, if you are looking for scalping opportunities, then the underlying bias should remain on the buy side. But we have to be cautious as the markets are already trading on the all-time highs. On the data front, we got a couple of data releases for the Asian economies and the European economies also. I won't really be going into details of the prior release, but still I would like to mention that we saw for the Germany there was a trade surplus of around euro 14 billion, 14.8 billion to be precise, and also we saw for the China, the Chinese banks have extended a record amount of loans amounting to Chinese yuan 3.58 trillion. So this is a huge number, and this shows the confidence of the Chinese bank in the economy while extending the credit. But moving on to the North American trading session, the release is not that optimistic. Here we got the NFIB Business Optimism Index for small businesses, and this is the lowest the index has been since May of 2020, and it actually declined in the last month. Sorry, this month. Here the data is for January. I have mistakenly written December. In the prior month, it was at 95.9, and now for this month it has declined further. And this is happening mainly because of the COVID pandemic, which is still raging, but raging in United States. But moving forward, for the month of December, sorry, for the month of February, I am expecting the business optimism index to improve from these lows. Now let's turn our attention to the technical segment. Here we will see what's happening in the Euro USD first, and then we will also take a look on the dollar index technical outlook. Let's start with the Euro USD's technical outlook. This is the daily time frame chart, and here after getting closer to the 50% Fibonacci retracement of its rally starting from 1.16 to 1.235. The Euro USD has rebounded fairly sharply, and we are seeing the buying momentum here, which I think is here to stay. So it will be better for us to adjust to these changing circumstances. And now again, this is the time to look for buying opportunities instead of shorting, which we have been doing for the last couple of weeks. So if we want to look at the technical levels, I think 1.20 level is going to be a decisive marker in the near term. As long as the Euro USD is trading above it, we can continue to look for buying opportunities. If we take a look on the regression curve, it is going to flatten as we have seen the price action now moving to the upper band of this curve. And also if we take a look on the pivot point series formation, the Euro USD has been able to rebound and sustain itself above the first support of this month pivot point series. So on the higher side, the target was closer to the central pivot point, which is there just below 1.22. So in the near term, I think if we are fortunate enough to get the entry anywhere closer to this immediate swing low level, which is there just little above 1.20, we would be in good position. Even the risk reward ratio would also be in our favor. But for that to happen, we will need some correction and consolidation first. And in the near term, we can continue to look for buying opportunity anywhere closer to this 50 SMA, which is positioning itself to cross above 200 SMA. So this price zone of around 1.205 is going to be the level to watch out for right now. The Euro USD is almost 50 pips away from this confluence zone, and on the lower side, we have this 100 SMA also to act as our possible stop loss levels in case we get the entry anywhere closer to this confluence zone. And for that, we will need some correction and then consolidation to happen. Right now, given the substantial move which we have already seen, the risk reward ratio is not that much in favor, and that's the only reason because of which I would like to sit on the sidelines for the remaining of today's session. But if we see some correction and consolidation, then these two SMAs, the 50 and 200 SMA, would be helping us while deciding the exact entry and exit points. And I would suggest that we should be trying to look for the entry anywhere closer to this confluence zone while keeping the 100 SMA as our possible stop loss level. Now, moving on to the dollar index technical outlook. The dollar has gone on to the back foot after getting closer to the 92 levels. It made a high closer to 91.60, and from there onwards, it has been all downhill, and it has now gotten closer to the 50% Fibonacci retracement of its rally, starting at around 89.1 and lasting till 91.6. And the near term outlook is going to be dependent on how the dollar index reacts after getting closer to this key retracement level. For intraday perspective, the outlook is still bearish, and if you look at the pivot point series formation, the price action is still happening in the bullish zone, but overall, looking at its sharp deceleration on the higher side, we will have to be careful while looking for any trading opportunity. On the lower side, I would suggest that if this decline extends toward the central pivot point, then we will be in better position to make a judgment after the consolidation phase. If we see it respecting this central pivot point zone, then some retracement can't be ruled out, which might take eventually the dollar index back towards this 91 zone. But on the higher side, we do have these stiff resistance which stalled the rally on the first attempt also. So because of that, we will have to be cautious in the next attempt as well. And if you consider the regression curve, it is going to flatten as the price action has moved to the lower band, and in due course of time, if we don't really see any sharp recovery happening in the dollar index, then it is going to tilt on the short sell side also. So that will add one more confirmatory factor while making the judgment on the dollar index trade outlook. So here the price zone of around this key SMAs of 50, 100, and 200 is going to be of high importance. This is the price zone where we already saw these swing lows formation from where the renewed buying momentum was seen in the prior rally. And also, while going down, the dollar index took a pause closer to this 91 zone, and now we also have this 200 SMA lining up, and not to forget of these two key SMAs on the shorter time frame, the 50 and 100 SMAs. So this confluence zone of around 91 should be the ideal place to look for fresh shorting opportunities. But that's kind of far away. So we will have to be on the watch, and we will have to wait for some retracement on the higher side after this deep rally, which we have already experienced in the dollar index. And then maybe we can utilize the prior swing high as our possible stop loss while taking the price zone of central pivot point, which is there on the monthly time frame, or the price zone of around 90.2 as our target on the lower side. So I am expecting the dollar index to remain in the bearish zone for next couple of sessions. And if that is going to be the case, this price zone of around 91 would be the ideal price area to look out for while keeping our stop loss is sharp, and maybe 20-30 pips stop loss would not be that big while looking for the 70 to 80 pips move on the lower side, which will get us the risk reward ratio of better than 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Thank you all for joining in. Do subscribe to the DXY webinar channel to stay updated on the market developments. Goodbye.